Hey guys, welcome to this week's edition of the Swyftx Squawk. I'm Pav, lead market analyst here at Swyftx, and we talked about it last week. We talked about potentially the market feeling a little bit stuck in the middle, waiting for a key decision to play out. Year to date, it's been a cracker of a year for crypto, and we were wondering if some of the headwinds that we were seeing, as we discussed last week, go check out that article in case you didn't see it, may have potentially been enough to stall the market and stop it in its tracks, which we have seen now with the week playing out. Crypto markets as a whole, they're down from where they were last week. Altcoins in particular bearing quite a bit of the brunt. But yeah, we have seen Bitcoin fall under $90,000. It's currently trading at about $89,500 US. While we talked about there being some key headwinds from a political front, and if they were going to play some impact, there may be some suggestions that while that's not the key source of why the market's down, it may have attributed to why we've seen a little bit of this fallback across market prices. And we look at some of the top losers in the last 7 days. We can see Sui, Dogecoin, Solana, Chainlink, Ethereum, all boasting double-digit losses. It's definitely been a little bit of a harsh wake-up call for a lot of people who were potentially a bit jovial last week, seeing the price movements quite positive. Now, I also want to give a shout out to a key industry report that we've put together here at Swyftx. I'll include a link in the description below. But this is one, if you're wanting just a retrospective on Q4, what were some of the key drivers of the market downturn that we did see, as well as covering some other narratives that we saw took off and the performance of those narratives. Really recommend going and checking it out. We've done a lot of effort even sharing some of our own internal insights. What are the demographics? Who are we seeing in the market right now and how much of a role are they playing? As well as some key takes from some industry experts as well. We've got some analysts and ambassadors with Swyftx. We've got David Bird, ASX trader, as well as Jason Pizzino from TIA as well. So there's some commentary there that you want to check out. You can find that again on our website or just in the description below. But again, just to jump into why we potentially saw a lot of this turmoil in the market this week. As much as we talk about data having a place in the actions and the beliefs that investors and traders are having right now in the market, we're seeing the political front sort of bleed through again this year. We saw in 2025 how big of an impact the tariff ordeal had on the markets, and we have seen that come out again for the first time in a couple of months. While we're not a political analyst, this is not a political analyst take at all. I'm not even going to try and jump into that arena. But we have seen those escalations between the US, Europe, all over the issue of Greenland that resulted in additional tariffs being laid out for Europe. So again, something that the market now has to respond to that it didn't have to respond to before. And again, the one thing we spoke about last year quite a bit is the unpredictability of these events. And the market has to deal with this new information coming in on the fly. While we did see this commitment to tariffs coming in, and it was very much around the same time 3 days ago, where we did see prices start to fall. Again, not the exact reason why price fell, but it definitely added to the narrative. We have seen that now being revoked. So as soon as we saw the tariffs being laid out, they've been walked back again. So again, a pattern that we have seen again from the president of the United States as well last year. So now my key question is, how are investors and traders going to digest this information? Is it enough for them to jump back in the market, develop some sort of trend? Because that was a key thing we were concerned about over the last few weeks, is if this trend had any strength to it. Was it mainly just a relief rally, or was it something a little bit more? So now we get to see, how is the market going to respond? Are we going to see that conviction come back in the market, a little bit less trepidation and fear on the uncertainties as this apparent framework of a future deal is being boasted about? Time will tell, right? And that's something that I'll be watching very keenly. Now, another thing I'd to call out is that if we look at the Euphoria index, now this is something that I've put together. We talk about it quite a bit, again, in that end of quarter industry report, so you can go check it out if you want to learn more about it. But essentially, it is an indexation of a few dynamics in the market. So what we can see here is that this indicator basically does oscillate, and we can identify periods where the market may be oversold. There may be too much fear and despair in the market versus potentially overbought. When are we seeing excessive amounts of euphoria in the market? And we can see right now that we're casually just approaching that mid-range, about 47, very similar to what we saw between May and July of 2024. So time will tell if this is essentially similar price action, where we are seeing the market run up its expectations, only to not have enough, again, durability and strength and reason to keep up this momentum in the market. I think that's the key concern that I'm watching for here as well. Idealistically, we could also be just range bound here before another consolidation and a leg up. This is, again, just moving on from last week. As much as we have seen more cards come out of the deck, We're still waiting to obviously learn more about what the market is going to think next and how it's going to respond based upon everything that we're seeing play out right now. Another key thing to just watch out for is we do have the US interest rate meeting next week. So that is about 6 days away. We will see the first words from policymakers for 2026 and how they're going to approach how the market is performing right now. There's not really been any major cracks in the job market, and inflation seems to be coming in as expected, if not a little bit cooler than what the expectations were this month, as we covered last week as well. So going to be a really interesting one to watch how that plays out. But that's it from me here this week at Swyftx. We'll catch you again next time. Thanks, guys.